Hey everybody, this is Uncle Gary and welcome to this edition. We are going to be talking about the war that is taking place between hedge funds and the retail traders, the Momo crowd. We're going to be talking about GameStop and what is happening with that stock. It's up over 1,600% in under 2 weeks. We're going to be talking about Beanie Babies. We'll talk about WallStreetBets. We'll talk about a whole range of topics. So go ahead, like and subscribe. Give me a comment down below if there's things you'd like to talk about that I haven't covered in this video. And if you know anybody that's interested in this kind of content, please go ahead and share it. I'd really appreciate if other people could understand what we talk about here and get value from it as well. Thank you very much for joining us, and let's jump right in. First, before we get into the actual story, I'm going to give you a few foundational concepts just so that those of you who haven't been following this closely understand what we're talking about. And I'm going to start off with a quote by Vladimir Lenin. And in his quote, what he basically said was, there are decades where nothing happens. And then there are weeks where decades happen. Well, let me tell you, in these past few days, decades have happened. The next piece is GameStop. GameStop is an American video game and merchandising retailer, and it's got about 5,500 stores. The stores are spread across America, Canada, Europe, Australia, New Zealand, and so on. And you may know them by the name either GameStop. You may have seen a store that says GameStop outside, or maybe EB Games. You may have even seen ThinkGeek, I think, is another one of their brands. So they've had a whole range of computer games. They sell video games. And if you haven't been following them, GameStop's ticker of GME on the stock exchange has had quite the bull run. It's risen from approximately about $20 about 2 weeks ago to $380, give or take. And that is an increase of over 1,640%, give or take. An absolutely stratospheric rise. And today, it became the most traded stock on the stock exchange. Beat out Tesla, beat out Apple, beat out all of the other ones to become the most traded stock. It went absolutely ballistic. Okay, the next one is WallStreetBets, or WSB as some people could refer to it. WallStreetBets is actually a channel or a topic that has been taking place as a conversation thread on a social media platform known as Reddit, Reddit. Now, for those of you who don't use Reddit, it's basically a social media app where you can discuss things in sort of a threaded conversation way. There is another place that WallStreetBets has been occurring and the conversation been going on. This is on a chat app, for those of you familiar with it, known as Discord, Discord, similar to WhatsApp, a little bit like Slack, if those of you familiar with that at work, or any one of the chat apps. It's basically a similar kind of thing where you can have topics or threads or conversation channels, and one of them is known as WallStreetBets, where a group of investors have all basically come in to discuss stocks in this group. Momo, or Momo kids, Robinhood kids, the retail trade, the Robinhood crowd, or the Momo crowd, the Momo gang, you might hear these terms. MOMO is short for momentum traders. So MOMO, or Robinhood kids, these are generally speaking a lot younger. They're not professional traders. They're retail traders, which means they sort of trade in their home or in their basement or wherever they're active in their day during the lockdowns. And they're effectively a very unique and distinct group of traders who are willing to bet very speculatively, in a nutshell. So those are some of the things that we're going to talk about today. Now I'm going to actually get into, so what has been actually happening? Now that you've got some of this background, I'm going to talk about the actual story of what's been happening. So it starts like this. Basically, the Momo crowd and the traditional big money hedge funds have been getting into something of a spat. And what that looks like is the traditional big money. So this is the hedge funds that are professionally managing very large sums of money on Wall Street, and for private families who are extremely wealthy or very big corporations investing money, and they're, the CEOs of very successful places, etc., etc. There are these types of funds that are put together to invest in very speculative or very highly profitable investments. Now, what's been happening is that the traditional big money hedge fund traders and the Momo kids have been getting into a tussle. And what that looks like is the Momo crowd have been pumping up certain stocks that they think are, whatever reason, they think are worth pumping up. So they talk about them on their Reddit channel, their Discord channel, and they've been buying them in very large amounts. So they've really been rocketing the price. Now, the hedge funds and the big money that come from Wall Street and the very privately held funds and so on, they have a way to analyze the market. They have very, very expensive PhDs and rocket scientists who study math, and they apply it to Wall Street trading. So they've got all of these types of algorithms and very powerful computing platforms and algorithmic trading systems and so on. And what they do is they analyze a market and they look for anomalies or gaps where something in the market isn't being covered correctly, or something's moving and there's a gap between two prices that they can exploit. And then what they do is, even if it's just for a few cents, they will basically go in and trade that very aggressively. Now, what's been happening is the Momo kids have bought a stock that was, for all intents and purposes, not really valued as highly as they were buying it. And then the hedge funds were able to pick up that there was a gap in this market, and what they thought is there's no reason why that stock, in this case GameStop, should go up that high. So what we'll do is we'll do something known as shorting the stock. So taking a short position or shorting a stock is where you basically sell the stock before you own it. And what that means is they effectively sell the stock by borrowing it from someone else. So they will ask the market for the sum of that stock, they will sell it, and they promise to give the people who lent it to them back the stock at some future date. And they pay them interest for keeping that stock, on tap. So what that would look like, if I gave you a different example just for the sake of clarity, if I knew that a person wanted to buy a very specific baseball bat, and my friend had that baseball bat, and I knew that the sports store nearby was going to get a big shipment of these baseball bats in 2 weeks, what I could do is ask my friend, can you please give me your baseball bat on loan, and I'm going to replace it in 2 weeks. And he would say, fine, here's the baseball bat. I would then sell the baseball bat for, let's say, $1,000 to someone who wanted it right now. And then knowing that eventually the sports store nearby would get this consignment, the price of the bats would go on sale, let's say, to $500, and I would be able to buy it back at $500 and give it to my friend. So I would have sold it for $1,000 before I had bought it for $500, and effectively I would have made the difference, which is $500. That's what it looks like to short a stock. You sell it before you buy it, or you lend it from someone else, and then you borrow that stock from someone else who lends it to you, and then you sell it before you give it back to them. The intention with that is the price is going to go down. That's the point of why you would do that. If you know the price has got to go down, that's what the hedge funds did. They saw GameStop stock going way, way, way up, and they thought there's no way it's actually valued at that. It's never going to stay at that price. I'm going to short the stock. So they started that transaction. Now, what then happened was the Momo kids and the Robinhood traders and the retail investors all saw this and thought, if they're going to short the stock, the Wall Street bankers and the heavy hedge fund hitters, if they're shorting the stock, we're going to buy it even harder. And that really caused a real problem, because the people who had shorted the stock have to give back that stock at some point. They get called on that and they have to exit their position. So what that looked like was one hedge fund in particular, a main one known as Melvin Capital. Melvin Capital was one of the prestige and premier stock pickers in the industry. He has been the golden child of how to pick stocks. Fairly young team. They have about 12 or $13 billion assets under management, and they've been doing amazingly well over their time since they started in about, I think it was 2013, 2014. They've been extremely successful. Well, they took the opposing side of this GameStop trade and got called out. The Momo team pushed the stock price so high that Melvin Capital team had to exit. They had no choice. And what's happened is within the first month of 2021, Melvin Capital is down 30%, 3-0, in 1 month for one of the most successful hedge funds on Wall Street. This is not an amusing fact to them. They had to go to some of their fellow hedge funds and actually ask for a direct injection investment. They needed about another $2.5 billion just to cover what had happened in the market. So they got into some real hot water and lost some money. So that's essentially the story. The stock has gone crazy. The hedge funds are getting a black eye 6 ways from Sunday, and everyone is pretty hit up about the whole situation. Now, what everyone is saying is that the Momo kids are stupid, they're irrational, they're dangerous, undisciplined, they shouldn't be allowed to do this, that they're just really a bunch of hooligans and they're too stupid to even understand what a fundamental valuation of a stock is. They're just literally deadheads sitting in their parents' basement doing nothing with their lives but trading stocks. And they're very, very stupid for doing it. That's what most people are talking about. Now, there's a couple of pieces I'm going to go through, and then I'm going to tell you what Uncle Gary thinks, because it's quite different. The next thing that people will say is that a stock market is basically based on fundamental valuations of stocks, which means how much money does the company make. If you divide that by the number of shares that are out, you kind of get a yield about how much of the dividend you would get for every stock you owned or every share that you owned. And there's a fundamental reason why the stock should have a price, and not just any price. It should basically move to a certain point where everyone can value what it's about. That's what the traditional belief is. And additionally, they believe that the Momo crowd does not understand fundamental valuations. Second thing, many people will believe and tell you that this is just a flash in the pan. It's just a one-off thing. It's going to go away soon enough. You don't need to worry. They'll say that the hedge funds who are doing what's called quantitative research, they hire people who are known as quants, and it's short for quantitative research or quantitative analyst, are basically very, very highly skilled and educated mathematicians. And they are like rocket scientists, but for Wall Street. They will tell you that funds and hedge funds do this quantitative analysis, and that's what the real professionals use to do real good old-fashioned fundamental analysis and understanding how the market's going to work. And you need to be that good at math. You need to have that much computing power. It's all about being a professional trader. Well, the other things that they may also tell you are along those lines. Now I'm going to give you what Uncle Gary says. So come a little closer. We're going to get into a straight conversation here. The first thing that Uncle Gary is going to tell you is that the Momo crowd is not stupid. These are not undisciplined or stupid people. The joke will be on anybody who thinks that this retail group of investors are stupid people. I've seen this time and time again where a generation, and I'm guilty of this myself, an older generation will look at a younger generation and say that they don't understand what they're doing, they have no experience, they're foolish, they have no work ethic, and they really don't deserve anything that they're getting. But if you look back in history, you'll probably find that this is pervasive. This has happened where my parents said that about my generation, their parents said that about their generation, their music was bad, the way they danced was wrong, the things that they did, the hobbies they were interested in were all a waste of time. This is a persistent situation, or what I like to call a persistent complaint, that happens one generation to the next. These kids in the Momo group, I'm calling them kids because that's just a friendly name, but these people in the Momo crowd, in the Robinhood traders, are not all stupid. There might be some people who are undisciplined, but there is a very clear group of people who know exactly what they're doing. Now, the next thing, let's talk about WSB, Wall Street Bets. The thing about Wall Street Bets is it was revealed because we could now find a channel where everyone was talking. What we realized and discovered over the last few weeks is that Wall Street Bets has, in Wall Street Bets and the other ones like it, there are over 2.7 million retail traders in these groups. That is an enormous amount of people who are all listening and trading on the things that are being discussed in those groups. So Wall Street Bets itself, I think, has 1.3 million followers. It's like a very large Facebook group, if you will. It is enormously powerful when a group of people get together. So much so the amount of money and trading that they can cause is as large as a very good or healthy sized hedge fund. They're as powerful as a big hedge fund, even though they're all distributed in much smaller amounts. Notably, they are very irritated. They are not a happy group. They are a disgruntled group, and they've essentially believe that they're being duped or manipulated by, you may have heard the term, the man. They basically want to stick it to the man. So what's happening here is they believe they're being ripped off or manipulated, and they are getting their own back. This is a partly vengeful act or approach. So they're not a happy crowd. The Momo crowd are quite disgruntled. And that may stem from a number of reasons. One that immediately comes to mind is for those of us that remember the subprime mortgage crisis in 2008. Well, these people in the Momo crowd and the retail trade, the Robinhood investors, were probably teenagers in their early teens sitting at the dining room table during 2008, watching their parents go broke, watching their parents lose their retirement savings. And what they saw was their parents went broke, the bankers who sold mortgages that they knew would never be able to be paid off, or were mortgage instruments that just should never have been sold, got bailed out. Nothing actually happened. They didn't even go to jail. So what they saw was their parents paid the price and the bankers got off free, and they see that as a very big double standard. It's one reason I can think of immediately that comes to mind, among many others. The whole nature of how the economic and financial markets are situated is, if you've got money, you can participate, but if you don't, you kind of are left out in the cold to some degree. So the next piece, hedge funds and large investors have these staff of quants. They've got a range of 6, 10, 12, 20 people who are these quantitative analysts, high math, rocket scientists who they hired out of university, and they've trained them to apply these mathematical skills to Wall Street. And they look for these anomalies in the market so that they can exploit them. Even if it's just a few cents gap between two stocks, they will fill that gap with hundreds of millions of dollars, sometimes even billions of dollars, and they will exploit that gap to their benefit. That's how they make a lot of their profits. They'll take the opposing side of a trade because they know something's going to happen. They've done the analysis on it. Well, here's the thing. What Uncle Gary's telling you is that the Momo kids have been busy little bees. They have been learning. And I'm not sure whether it's because they follow the Twitter handles of some of the quants that post on Twitter, whether they watch YouTube videos about how these quants work, whether they used to be quants themselves and then actually left a company after doing an internship or learning enough to know what they're doing, and then are smart kids and they've actually gone off and done this for themselves. But one way or the other, there is a group inside the Momo kids or the Momo crew or the retail investors or the Robin Hooders or whatever you want to call them. There is a group inside there who are very sophisticated in their understanding of this stuff. They are not fools. Now, other than that, they also have access to an enormous amount of computing power. This is something that traditionally hedge funds have invested in big computers, and banks have got access to these massive mainframes and lots of very powerful computers to do simulations and run these mathematical algorithms. Well, with the nature of how you can access computing power now using the public clouds and the internet, you can go to Google or Amazon or Microsoft and get access to this very powerful computing kit. The Momo kids are able to keep up and have their own ability to have an edge in this market. Even the things I've shown you on this channel of FinViz and TradingView, those are extremely powerful platforms with access to massive amounts of data that the retail investors can now poll and harvest and analyze and look back to test their models, and they've really, really come a long way. In short, the hedge funds have lost their edge. In many respects, what used to be the best, the safe haven of where hedge funds used to have secret meetings where they knew something was happening and they analyzed it, only very few people ever got to see or hear those kind of things. Well, now with the Momo trade, what's happening is they have lost that edge and more people are seeing that. And worse, the Momo traders are very transparent. They are posting in Reddit groups, literally telling everyone what they see. And whether they're right or wrong, it doesn't really matter. There's 2.5, 2.6, 2.7 million people all generally looking at what's going on from this inner circle of very few people who are doing this analysis. Now, the other piece about this is the Momo crowd, being this disgruntled, have worked out how to game the system. They've worked out how to game the house in a way. What I mean by that is traditionally the hedge funds would notice there's a gap in the market and they would exploit that gap. So this has started to look a little bit like the movie Moneyball. Some of you may remember it. It was some years ago now, but a very good movie about if you were building a baseball team and you were looking for well-rounded players, you'd always try and buy good players. Well, one chap came along and said, I don't think it's good players we need. We need specific players to fill the gaps of our team. We're very good at this, but we're not good at that. Find a player who's just good at that. Don't necessarily find a well-rounded player. Find a very specific player for that. And if you build that team using what your team needs to be the most successful, they maximize their ability to win, not maximize their ability to be well-rounded. So it was a very, very interesting thing. They used mathematics, and Moneyball was about that. What's happened in the market now is essentially the Moneyball game has been Moneyballed. And that's a bit like if the Momo kids know that the hedge funds will find an anomaly and always go and try and exploit it, the Momo kids have now realized then we can exploit the fact that they will exploit that. And so they're now playing a game of one-upmanship by looking at these very exotic or very unusual trade positions like shorting or option trading or taking out the volatility on a stock, how volatile the market could be, and trading against how volatile it should be versus what's going to happen. And even on this channel, I've talked about in previous videos, if you trade options, for every one option contract you buy or sell, there are 100 shares implicated underneath that option contract. So that means if I buy 1,000 options, that means you've got to have 100 shares for every one of those contracts. So if I just go into the market and for a few cents or very few dollars buy a bunch of option contracts, I make the person who sold me the option contract have to go out and buy that stock. So I can very easily manipulate that stock. If I know that I've bought some of that stock and I want to see it go up, I can buy some options to cause it to go up. And now that was normally never a problem before. Well, let me tell you, the amount of options trading we are doing at the moment is at unbelievable levels, unprecedented levels. So it is absolutely causing a wild tail effect for the stock prices, where we're seeing things that don't make any sense. But it's basically because we're either buying the options or trying to cover a position to manipulate someone else, and the money ballers are being moneyballed. This is a game changer. It's going to change the way of how things are done on the markets. So let me give you a few other observations before we wrap up. Not to take sides here. I'm not one to take sides specifically, but this game has been a little bit rigged. And what I mean by that is the hedge funds are allowed to do certain things that most retail investors are not allowed to do, or they're allowed to do things without needing to disclose that they're doing them. They kind of are afforded a protection that many other companies or retail investors are not. And the retail investors don't like that. So one of the things that happened, that's Uncle Gary, this is an inside baseball conversation here. The hedge funds are now, it's become visible. What they did was they shorted GameStop to 140% of the available stock. And that's not really fair. They were able to short more than the stock than is available. And that's kind of shouldn't really be allowed. Because if you allow that to happen, you're sort of manipulating the stock. That's not really a fair playing field. So with that being the case, it's not really that much of a surprise that the Momo crowd decided, well, in that case, we're going to manipulate the manipulators. So they're very, very smart. The Momo crowd is very, very smart. I'm a very keen hobbyist, and I love studying this, and I've been watching this for 25 years. I pride myself on really keeping up to this. And let me tell you, the speed and the caliber of the knowledge being transferred in these groups is remarkable. These are not foolish people. So the force multiplier that's happening from all the followers is immense. Everyone is jumping on the bandwagon to make a fast buck. So a few of the inner circle quants or whoever's, basically able to come up with some really interesting analysis and research says something in one of the channels. The followers of all these channels who don't know anything about what's going on just follow along. They become like a force multiplier, and millions of people start buying options or start buying the actual underlying stock, and it causes all manner of volatility. So what that means is this is the same as when I was doing social media platforms in the late part of the 2000s, 2005, 2006. It was very popular when Facebook and Twitter came out that corporations wanted to try and put social media platforms inside their companies. They wanted their own form of Facebook inside. And so they would put in these platforms. And I was part of a company that would implement these. And one of the things that they realized is if you give people a social media platform, they'll start to express themselves. And most companies that I dealt with, especially the large public ones, said, no, we will not allow people to express certainly negative opinions internally. We will shut that down. We will not have that conversation. And unfortunately, they underestimated the internet a little bit, because what happened was people just went home, got on their laptop, and actually posted publicly. So sites like Glassdoor or Twitter, actual Twitter itself, or Facebook, where you can actually read what people think about a stock or a company or what it's like to work there. This is kind of what's happened is we're sharing the information, and the institutional investors are trying to stop people talking on the internet. They may try. They removed the Discord server so that the WallStreetBets is not available on Discord anymore. They say that they did this because of a policy violation and spreading of misinformation. But it just seems like a very interesting time to be doing it at the same time. So I don't know exactly what's happening there, but let's just cover off the last couple of points here. There are other stocks that are being manipulated or gamed. It's not just GameStop. So we can talk about BlackBerry, Nokia, Blockbuster showed up on my radar today. Even Sears. Sears is defunct. Sears is basically dead. Sears is trading for pennies. It was an empire. It's basically decimated. And Sears, just today, January 27th, has gone up more than 113%. That's about 11 cents it's gone up. It's just because people are looking for cheap stocks that if they buy them, they'll suddenly go up a lot and they think other people will get involved with them. So it is the most remarkable time. And the most important thing to notice in all of this is that the people who are trading this, the Momo crowd, the retail investors, are not stupid. They are highly trained and developed at what I call collector arbitrage. They know how to collect things that are suddenly valuable. And I'll give you an example of what I mean by that. Many of you may remember the Beanie Baby craze. There's these little, dolls and toys that kids used to want a few seasons ago. Some of you may remember Pokemon cards. Some of you may remember Tamagotchis. Well, this group of generation of traders, the retail crowd, grew up understanding how much something was worth, even though it didn't have that inherent value. A Beanie Baby is just a stuffed toy. It doesn't actually have massive value. But a rare Beanie Baby, when the Christmas season came around and they were in demand, a rare Beanie Baby could fetch up $1,000, sometimes $2,000 for a stuffed animal. Now, there's no reason for it to be that price. But if it's in demand and someone's willing to pay it, that's the price, whether we like that fact or not. So whatever the price GameStop stock is, or BlackBerry, or Sears, or any stock you like, if people are willing to buy it for that price, then that's the price. It's not about the fundamental value of it if everyone's just collecting it. So that's what's really been happening here. To wrap up, I'm going to give you a bow to put this, to put around this whole situation. In short, this situation is not going to go away. We are going to be dealing with a new way of trading and dealing. From what I've seen, Uncle Gary is telling you this game has changed forever. Decades have happened in days. Hedge funds are now for the first time nervous about making trades, nervous to the tune of billions of dollars. They've never been like this. We're bears, the bear market, who are people that think the stock is going to go down. They want it to go down and sell. So a bear market is a downward market and a bull market is an upward market. The bears and people who are permanently bearish about a market are now nervous about being bearish because they think the retail crowd could go against them and they could get stung. We've never seen skittish hedge funds before. This is very, very interesting territory to say the least. The other piece about this is the game has been raised to a whole new level and then the game has changed on that level. It's nothing like we've seen before. And what I mean by that, this is a bit like toilet paper in a pandemic. We weren't short of toilet paper during the pandemic. I'm not even sure why people thought it was a needed idea to buy toilet paper. We had a respiratory virus breakout and people bought toilet paper. It doesn't even make sense. But there was no shortage of toilet paper until everyone went out and bought toilet paper all of a sudden. Then we were very short of toilet paper. And that's exactly what's happening with these stocks. It's got nothing to do with fundamentals. It's got nothing to do with what the stock is or isn't. It's like betting on a horse at a horse race. There is no necessity to worry about where the horse is stabled, who feeds it, how well it's going to do after the race. We're betting on the race, and that's all the retail crowd is doing. It's a very different conversation. So the final point to all of this is that for those of us who have invested our retirement savings in our 401ks, our mutual funds, the index funds, for those people who have invested in the stock market as a way to earn the 5, 6, 7, 10, 12% you earn for your retirement, consider yourself warned. Your retirement saving area or environment is now the latest frontier in a war between retail investors and hedge funds. This is no longer about fundamental valuation and dividends. This is an out-and-out war between two factions of traders who are extremely intelligent and are very well armed with information, data, access to compute power. It is going to be very, very interesting. So that's what I wanted to share with you. I'll keep posting updates on this. I do have my next video, which is whether the market crash I predicted in December has actually come true. You'll have seen some changes today. If I'm checking my notes here, we had the biggest drop in 3 months today, but that may not have been what I was forecasting. So stay tuned for that one in a couple of days. And remember, this is going to be a game changer. Things could get ugly in this game very, very fast. Don't forget, like and subscribe. Leave me comments down below. This is going to be the most exciting time I think I could have ever imagined happening. So stay with me. If there's things you don't understand and you want me to cover them, give me a comment down below and share this with people who you think would really benefit from knowing this information. Thank you very much for staying all the way to the end. You guys are awesome. I'm loving the comments and the feedback that I'm getting, and I'll see you on the next one.